Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, coming to you with the morning market preparation video for February 28th, 2018, the last trading day of February. So as this month winds to an end, we've kind of been handed a sour pill yesterday. 400 points up one day in the Dow, reverse it completely the next. The very definition of volatility. I suggested yesterday to kind of be prepared for the potential of a choppy market, and boy, did we get that. As a matter of fact, I counted several intraday whipsaws yesterday. We had our first whipsaw first thing in the morning. We whipped up, completely reversed it, and then we whipped back up here, reversed that again, whipped up one more time, and then finished the day whipping back down. That's just on an intraday 15-minute chart. Lots of back and forth whipping, choppy price action. Clearly the market didn't like the idea of additional interest rate increases that our new Fed chair suggested yesterday. What he did say, though, that I think is positive is he said that our economy is improving, that it's strong and that it's improving. That's a positive thing, and that's a good thing. And it's really hard for me to believe when we still have historically low interest rates that a quarter point an additional quarter point this year is going to tank this market. But, here we have it. It's all emotional. Doesn't have to be rational by any means. But let's take a look at where we are. Now, diamond's up above the 50-day moving average, and that's important. It's also important that we develop this little bit of a support area in price right through here. So this pullback, if we can hold in this level, I still think we're okay. Clearly, the volatility is challenging, and if you're not adapting to that volatility, everything that was working before, back over here when we just were moving up, if you have not adapted your trading to the new normal here in the market, you're seeing everything that was working before is now not working so well. You put in trades that look like a good entry signal only to, within the same day for that to reverse and maybe even be stopped out on the trade. So you're getting handed lots and lots of losses. What I think is important is you have to pull back on your trading. You have to trade smaller positions, and you have to adapt the way you trade. That means you're not trading as much. You're doing more waiting for the market to settle down, and looking for passive ways to bring some income in while we're waiting. Now, for an option trader, that's not all that hard, but for a stock trader, that is difficult. And what you need to do is just calm down in your trading, not do so much chasing around. The fear of missing out is one of those terrible emotions that makes you believe you have to trade every day, makes you believe that I'm going to miss it if I don't get in. But what you're missing is the volatility if you set out and wait for a better trade or wait for a better edge. And when we have 400-point swings, 2 days in a row, not quite 400 point yesterday, 300 point at one point yesterday, but we gapped up and ran 400 points the day before and reversed 300. When we do those kind of things, we can easily get chopped up. So be real careful here, guys. And this is just not, someone talking, without experience. I've been there. I have given up big portions of my capital trying to fight in a market where I don't belong. Fight in a market that's really meant for the big boys to determine where this direction is going to go. So be really careful how you're trading in here, because I'd hate to see you lose your capital and destroy your confidence before the market ever kind of settles down and we get back to some normal trading patterns. So kind of keep that in mind as you go forward. The positive here, again, we held above the 25,000 level on the Dow. That's an important psychological level. We held above the 50-day moving average, and that is also an important key, at least right now. If we take a look at the SPY also delivered us a bearish engulfing candle, but once again, we have that 50-day moving average right in there, and that price action support that could provide us a little holding point, a little place of, at least temporarily, hold in there, and hopefully those bulls can come back in. This will be the battleground now, right? We've moved that battleground. The battleground's right in here. That'll be where the fight is, and we're going to have to watch price action carefully to see if there's clues who's winning that battle. We could easily slip lower, okay? Don't want to see that happen, but it is definitely possible. If we can hold in this area, if the bulls can step up, we have the possibility of rallying up off of here. But if we start breaking down through these levels here, breaking down through that support, we could have some trouble ahead. So kind of keep that in mind. Remember, the market can remain irrational much longer than you can remain liquid when you're trying to fight a high volatility market like this. Take a look at the Qs. QQQ rallied up here, come very, very close to kissing the all-time high, and then bang, slammed us with a bearish engulfing candle. But the Qs being the strongest of the indexes right now, I'm not overly worried about this at this point, because we do have layers of support in here that hopefully will catch this price action. There's a layer of support here, a layer of support here, layer of support through here. So hopefully that will catch us, and then we've got our 50-day moving average in here. So a little bit of rest, a little bit of pullback, it would not be abnormal here. Consolidation up in here to build energy to maybe challenge that high seems very likely to me. Let's take a look at the IWM. IWM, bearish engulfing candle right at the 50-day moving average. Not a good sign. This is a classic blue ice failure pattern. The blue ice failure is we fall through the 50, we rally back up to test, and then we fail. IWM is truly suggesting at least another test of this low here is highly probable, and possibly even a new low. Now, let's hope that because we have some support right in here, that little price support is going to be able to hold the market. And with the rest of the indexes holding up above the 50, at least at this point, let's hope that we can gain some support here. Yesterday I mentioned the possibility that the VIX could hold price support right through this area, hold this price support, and bounce off of that 50-day moving average. That's exactly what ended up happening, unfortunately. Now, the question is, are we going to get follow through? We can bounce off of that, but what we need, if we're going to really start sinking, if things are going to change here, and we're going to get bearish again, then we need follow through to that. We need to break this downtrend on the VIX, okay, if that's going to be the case. So far, I don't see that happening in this morning's futures right now, and I think this is a positive. Right now, the morning futures are showing us nothing more than a rest. Okay, nothing more than a consolidation. We're flat. We've been slightly bullish to slightly bearish on the morning. We're flat on the futures, and I think that's a positive thing, because that puts us in the possibility. You know, we could easily have woken up this morning and seen a great big gap down. That didn't occur, and I see that as a positive today. Let's take a quick look at what's on the calendar. We got a bunch on the economic calendar today, important reports. GDP numbers coming in. It's expected to show just a tiny little decline on the second estimate here for the fourth quarter GDP. I don't know that that's going to move the market around much unless it misses completely. Chicago PMI remains incredibly strong, sitting up there at 6-year highs. PMI, Chicago PMI is very, very strong. Pending home sales have been a little bit volatile, flipping around, and that's kind of normal during cold weather and things like that. Home sales can be kind of volatile that way, but they're expecting just a little tiny tick down on the pending home sales today, according to consensus. And then the EIA Petroleum Status Report, obviously a report that can move the market around significantly. It's not forecast forward, but the last report showed a surprise decline, breaking the trend of supply increases and helping to bolster those oil stocks. So we would like to see that continue. We'd like to see those supplies continue to decline a little bit, bolstering those oil stocks and holding prices up in the market here a little bit. So kind of keep an eye on that. We still have a lot on the economic calendar today, or this week, so stay tuned. On the earnings calendar, we had just under 200 companies that were expected to report today, and those reports are coming in rapidly. Of course, they can move this market around on their own merit. One that happened today that really missed, Lowe's. Lowe's really botched it here, missed heavily on their earnings report, gapping significantly lower here this morning. So that's not helping us out in the market at all. But there are those that have reported good, strong earnings. So by and large, earnings this year have been nice and strong. So hopefully that continues. So with that, folks, I want to wish you a fantastic day. Please do me a favor if you feel this video is worth it. Click those thumbs up buttons, drop a comment, and please always feel free to share this video with anyone. If you have not subscribed to my YouTube channel, please do that now. Click that subscribe button and also the follow me button if you happen to be watching this on Facebook. Everyone, take care. Have a fantastic day. I wish you great profits, and I will talk to you all very, very soon, bright and early tomorrow morning.